Welcome back, fellow investors. In this video, I'm going to be covering an insurance and financial services company by the name of Prudential. You likely have heard of this company. They've been around for more than 100 years. So it's a very well-known and respected company. They have been benefiting from increasing interest rates, which gets really interesting for a company that's holding so much cash, so many investments. I'm going to analyze Prudential. I'm going to use the most latest financial statements they've provided in their earnings that they issued out on November 1st. I'll go through and evaluate the company and determine what I think the company is worth at a share price level, and then make a decision whether I should buy more shares, hold my shares, or sell my shares. Do me a favor and like my video and subscribe to my channel. And I'd love to get comments from you. My goal of my channel is to provide other investors, one more investor analysis and one more point of view as you make your decisions on what you want to invest in. None of what I do is investment advice, and I'm not recommending that you buy Prudential stock. I'm just sharing my experience. Now, let me share my process and get into analyzing Prudential. Over the years, I've developed my investing evaluation criteria and my decision process. I try to make it complete but simple, and I follow this process consistently across all my stocks. So I evaluate all my stocks with the same criteria, or potentially a new stock that I'm looking at investing in under this criteria. The first thing I want to look at is I want to invest in a company that I understand and I own. I don't necessarily want to buy a stock just because the metrics look good. I want to make sure I understand the business. Do I want to be a part owner in this business? Do I think the industry is good? Do I think the management team is operating the company well? Second, am I buying a good balance sheet? You can find a business that you think is great. You can find a really talented management team. But if the balance sheet has a bunch of problems, you are buying a lot of problems. And I want to avoid that. I want companies with clean balance sheets, which is measured by the debt needs to be less than 3 times EBITDA. And last, I want a discount on the stock. If you give me a discount on the stock and the stock is undervalued, the company is undervalued, there is a good chance that stock is going to rally up and it's going to reward me. So that's why I want that discount. I'm not looking for fairly priced companies. I'm looking for companies that are undervalued. And based on my criteria, I'll buy, hold, or sell a stock. So Prudential's been around for 145 plus years. It's a long time. They also manage over $1.4 trillion of assets. Most of those are assets that people are investing for their retirement. So it's not anything that Prudential directly invests. But they are a very well-known company. If you look at their dividends, which they pay a really nice high dividend, they have a 5-year annual dividends per share CAGR of 10%, which is attractive. Prudential announced their earnings on November 1st, and overall, the market liked the earnings. The stock price is up almost 5% since November 1st. Couple of things, couple of highlights is after-tax operating income was nice and healthy at 1.2 billion. And that's really good to see. Last year, they were operating with losses. So it's good that they're getting their business back on track. Book value did go down, and that's an area of concern. So I'm going to be watching book value going forward. One of the highlights of Prudential is the dividend they pay, and they're also repurchasing a lot of shares. So the combination of repurchasing shares, it makes every remaining share more valuable. And as I'll show later on, the stock price for Prudential has been doing really well within the 2023 year. Looking at the profit and loss of Prudential, they did fairly well in the quarter, and they're doing really well year to date. And as I look at their next 4 quarters of earnings per share, it looks really good. So good job, Prudential. The return on equity is 12.7. Very good. I think their U.S. business is where most of their growth and profits are. and there's more spread income. I happen to think that's because interest rates have gone up. So Prudential is making more money on the assets, the cash that they have and can invest. Now that interest rates are much higher, Prudential is making more money. They also lowered their expenses, so that's very good. Their income did go down, but overall their profitability went up. Let's take a look at the balance sheet. So I'm going to look at a couple key lines. One of them is the total investments that they're holding, and that's this line here. It has gone down from last year to this year. And I'm going to look at the cash line, and this is going to be a measure of all cash and investments that I'm going to take into evaluation. And I'm going to compare that to all the potential benefits they're going to pay to policyholders, as well as adding the debt that they have on their balance sheet. That'll give me a sense of, do they have more cash and investments than they do liabilities for policyholders or reserves to pay on policy claims, as well as debt. I also took net debt, which is cash compared to the debt level that they have, and it ends up being fairly low. It's 0.78. I want that to be less than 3. So based on that criteria, the balance sheet's nice and strong. So the statement of cash flows looks good. One of the things that I like about life insurance companies and professional services companies is that they generate a lot of cash, and therefore they can pay a high dividend. Overall, it's a really nice run rate of $5.4 billion for the first 9 months. I'm going to take that number and annualize it and use it for my evaluation. I believe that Prudential is discounted by 59%. And I get to that valuation using predominantly earnings per share and where I think earnings per share is headed, and valuing the company under an earnings per share discount model. And I also look at free cash flow and discount the free cash flows that I expect Prudential's going to generate and use that valuation. I'm going to start with earnings per share. I took the next 4 quarters that I expect earnings per share and use that number. I used a low PE. The historical PE for insurance companies is higher, but I'd like to use 12 just to be conservative. I'm going to grow those the earnings by 3%, nice and conservative. And then I use a discount of earnings per share calculation to get to a value of $121.84 for Prudential. You can buy shares at $95.75. So there's a discount of 27% on Prudential using earnings per share and discounting all the earnings per share that I believe the company is going to generate. Free cash flow is really good for this company. And annualized based on their first 9 months, they're going to produce over $7 billion of free cash flow. I'm not going to grow those free cash flows. I'm just going to keep them flat. And for terminal value, I'm going to use a 0 growth rate. And I'm going to discount those free cash flows that I expect by 10% as a weighted average cost of capital. That gives me a net present value of $67.6 billion for Prudential. Cash and all the investments that they have on their balance sheet amount to $424 billion. And they have debt as well as all the reserves against claims of $413 billion. So the equity value for Prudential is $77.9 billion. But their market cap is much lower at $34.4 billion. Gives me a stock valuation per share of $212. But you can buy shares for $95.75. So the amount of cash flow that Prudential generates is very high. It actually gives us a value much higher and a discount of 122% when we look at the free cash flow discount model. I'm going to combine the two, but I'm going to take earnings per share value and use that as 2/3 of the overall blended value. And I'm going to take the value that we got from free cash flow and use that as 1/3 the value, get to $152.19 per share, which gives us a 59% discount on Prudential. Looking at the stock for the last 12 months, it's actually down 3.75% year to date. They've been paying a dividend of 5.22%. But remember what Warren Buffett said, price is what you pay, value is what you get. And if you look at Prudential, if you'd have bought in the March timeframe, you'd be up 24%. So within 2023, there's been a really nice rally in Prudential. I started buying in mid-year, so I have a nice gain on the stock. But that's where the value investor that does their homework and sees when a stock price has really gotten to a discounted level wins. Is it when you do your homework and you buy at the right times, that's when you can see your investments really take off. Meanwhile, this stock pays more than 5% dividend, so you get to win both ways on Prudential. All right, so let's scorecard Prudential, and I'll make a decision whether I'm going to buy, hold, or sell. So first, I want to invest in the company that I believe in, that I understand, and I want to own. So do I want to own Prudential? The answer is yes. I like insurance companies because they generate a lot of cash. They hold a lot of investments. And especially right now, they can make a lot of money with the high interest rates. It's a good industry to invest in. Warren Buffett has invested in insurance companies for a long time. He really likes insurance companies for some of the reasons I spelled out. And their management team's doing a really good job. I think they had a couple of tough years 2 years ago. And generally, the change in interest rates have really affected companies, and management teams have had to change their strategies. And this team's really up to the task. They've been doing a good job. Next, I want a good balance sheet. I don't want a balance sheet with a lot of problems. I want a clean balance sheet. And Prudential has a good balance sheet. They provide a less than 1 times EBITDA ratio on their balance sheet. They have a lot of cash, and overall, their balance sheet's in good health. And they offer a really nice discount. So I'm going to keep buying shares of Prudential, adding to my position. And Prudential is part of my income portfolio because it pays more than 5% as a dividend. And as mentioned, it's been on a nice rally. So that's my analysis on Prudential. Hope you found it interesting. It's a life insurance company. It's an investment management company, and they've been around for more than 100 years. So it's a proven name. It's a trusted name. Do me a big favor and leave a comment on Prudential. I'd love to hear what other investors are doing with Prudential and seeing what you think of the company. And also, please like my video and subscribe to my channel if you like videos like these. With that, good luck investing out there.